Ever wonder if there's a repeatable formula for building a truly massive multi-billion-dollar empire? Well, today we're going to decode a three-part framework that has done exactly that, creating a $2.6 billion portfolio across industries that honestly couldn't seem more different. I mean, really, what is the connection here? How does one person absolutely crush it in trendy sunglasses, then turn around and master Spanish ride-sharing, and then West African banking? On the surface, it looks totally random, right? But believe me, underneath all that, there is a powerful and surprisingly consistent strategy at play. And the man behind it all is Alejandro Betancourt López. Now, his success isn't just a string of lucky breaks. Not at all. It's the result of a consistent, repeatable formula that we're about to break down for you, principle by principle. So, what's the very first ingredient in this secret sauce? Well, it's something that kind of flies in the face of conventional wisdom. You know, while most investors are buried deep in spreadsheets and financial models, his focus starts somewhere else entirely, with something much more fundamental: the people. And this quote right here says it all. This is the foundation of his entire philosophy. He has this core belief that the best idea in the world is going to fail with the wrong team, but the right team, they can make almost any good idea absolutely great. So what does that actually look like in practice? Well, this slide shows you that radical shift in priorities. On one hand, you have the typical investment focus, right? It's all about financial projections, market analysis, product details. But Betancourt López, he flips that completely on its head. He's looking for a proven management team, people with deep industry knowledge, and a shared vision. For him, the quality of the people will always outweigh a perfect plan on paper. So what exactly is he looking for in a team? Well, first off, he wants people who know their industry better than he does. He's not trying to be the smartest person in the room. Second, he wants entrepreneurs with a clear, driving philosophy. And maybe most importantly, he wants teams that have already proven they can get things done. I mean, think about it. With Hawker's sunglasses, the founders had already built a brand on just $300. With Auro Travel, the team were experts in Spain's incredibly complex regulations. See? He's not betting on ideas, he's betting on proven ability to execute. Okay, so finding the right people, that's huge. But it's only half the battle. The second part of the formula is knowing exactly where to place them. It's not just about the team, it's about positioning that team in the right part of the market at the perfect time to intercept the flow of profit. And he puts it perfectly right here. This isn't about finding where the value is right now. Anyone can do that. This is about predicting where the value is going to be next and making sure you get there first. It's about being proactive, not just reactive. Now, to make this idea really click, he uses this great analogy from the oil industry. So back in the early days, refiners like Standard Oil held all the power. They were the bottleneck. But then, as oil got scarcer, suddenly the exploration companies became way more valuable. And later, when supply got disrupted, it was the shipping companies that made enormous returns. You see, the value is constantly shifting to wherever the critical bottleneck is. The multi-billion-dollar question is, can you predict the next one? Let's see this bottleneck idea in action, because there's a perfect case study: ride-sharing in Spain. He saw the global trend. He knew that the Spanish market was going to shift away from taxis and towards platforms like Uber. But he didn't invest in a platform. He invested in the bottleneck. And here's the genius move. His company, Auro Travel, started gobbling up the one thing everyone would eventually need: the vehicle for hire licenses. They got about 2,000 of them before the big platforms really stormed the market. These little pieces of paper became the incredibly valuable, regulated asset. They were the bottleneck in that industry. And the payoff for controlling that bottleneck? Get this. By late 2022, both Uber and Cabify were bidding around 200 million euros to buy the company. That's what happens when you anticipate the value chain, lock down the key assets, and turn a regulatory headache into a massive financial win. All right. You've got the right people in the right market position. What's left? Well, this is the third and, frankly, the most dramatic principle of the whole formula. You have to swing for a home run. This is all about embracing huge risks and accepting failure in the pursuit of absolutely massive rewards. Yeah, forget about small, safe wins. His entire philosophy is about making these big, concentrated bets on opportunities that have the potential for truly transformative, game-changing returns. Like he says, he is always swinging for a home run.
Now, the math behind this mindset is what he calls his 2 out of 10 model. He goes into it fully expecting that 8 out of 10 of his high-stakes investments are probably going to fail. That's right, fail. But the 2 that succeed, they are designed to be so ridiculously massive that they more than cover all the losses and still generate incredible profits.
But swinging for a home run like that, it requires just an immense amount of conviction. This doesn't mean you just abandon your team when things go wrong. In fact, he's known for sticking with his ventures through the absolute toughest times, providing support long after most other investors would have cut their losses and bailed. And you want a perfect example of this home run strategy in action? Years before AI was the huge trend it is today, he made a big, high-risk bet on an AI company. That single investment has now returned 20 times his initial capital. It just goes to show you how one massive win can completely redefine an entire portfolio. So, there you have it. Those are the 3 core principles. Now let's put them all together and see how they create this single, powerful engine for success, no matter what industry you're looking at. So, for a quick recap, it's really this simple. First, you bet on the right people, proven teams who are total experts in their field. Second, you anticipate where the value chain is heading and you get there first. And third, you swing for the home run, accepting high risk for that chance of a massive reward. And you can see this exact formula applied so consistently across his entire portfolio. With Hawkers, you had a proven team, the direct-to-consumer value chain, and the huge risk of scaling a startup globally. With Auro Travel, it was regulatory experts, the value of those licenses, and betting big against the entire taxi industry. With BDK Financial in Africa, it was an expert banking team, the rise of mobile money, and the risk of investing in emerging markets. See, the pattern is always the same. So what's the big takeaway from all this? Well, this formula is basically a blueprint for an investor to move beyond just chasing trends. It's a method for actually building the underlying infrastructure that profits from those trends, whether we're talking about hyper-personalization, sustainability, or the next big thing that we haven't even thought of yet. Ultimately, this whole formula comes down to making calculated, courageous bets on a future that is completely uncertain, which kind of leaves us with one final question for you to think about. What future are you betting on?